Hello, this is Jordan, and this video is being recorded on Thursday, July 15th, 2021. Thank you so much for joining me today. Please like, comment, and subscribe if you're watching this on YouTube. In this video, I am going to discuss why the stock market is setting up for a significant correction and why that should be good for gold. To me, this looks like, looking at the last half of 2021, it looks like the most probable catalyst for precious metals. Now, let's get into it. And starting off here, I've received some comments about my audio not being high enough. I apologize. There's lots of settings here. I'm trying to get the best audio. I think I found the right setting and turned it up. If not, and if the audio is too low, do yourselves a favor and just turn it up a little bit. I hope that is not too much trouble. But enough with that. Let's get into the market and the stock market specifically. And I'm just going to show a couple of charts here. And I'm not going to spend a lot of time on them. But these charts illustrate why the market is vulnerable to a sustained correction. This first one here, this is from sentimenttrader.com. Really interesting. It evaluates the number of days the market was trading within the top 90% of that daily range. However, but at the same time, during the last hour of trading, the advanced decline line was in the bottom 10% of its range. So we're talking about potentially a very strong day, but significant quiet distribution in the last hour. And look, there's 4 significant instances of this going back over the last 5-6 years or so, and they all coincide with a significant correction. Now, you never want to take one indicator at its word entirely, and in that instance, there's only 4 data points. I mean, if there were 10 or 20, that would be a lot more significant. But nevertheless, it's very significant by itself, in my opinion. Here's another chart. This is from @MacroOps. He has some great charts on Twitter. He has a free newsletter I just joined. And this shows global financial conditions at the bottom. And I'm not sure exactly what goes into that. I'm sure real yields is probably one component. There's probably some other things. I mean, they're market-based because they're changing over time. And we can see that, again, look at the peaks in the data. It tends to correspond with important peaks in global markets. This is not U.S. specific. It's global markets ex-Japan. Another one, this is the skew index, which revolves around the options market. And high skew readings warn of a wave of risk aversion. And so according to the author of this chart, the options market has priced in a significant chance of a 2 standard deviation move lower in the S&P 500. And again, let's go back here over the last 3-4 years or so. And when the skew index is fairly high, that has coincided with the corrections in the stock market. So the skew index is pretty high. Now, the takeaway is I don't know if a stock correction is imminent, as in it's going to start today or this week or next month. But I do think at some point over the coming months and for the second half of this year, we are going to see a correction, or at least the start of a sustained correction. Now, finally, let's get into how that impacts precious metals. Now, we're only looking at a slice of history here going back to 2015 or so. And the highlights there are the 3 recent significant declines in the stock market. Well, what do you know? These 3 declines in the stock market, they've coincided with the last 3, in my opinion, most significant lows in precious metals. I mean, we have the COVID low. Then before that, we have the low in summer 2018, which is a quiet low, but that proved to be a very significant low. And then we have at the end of 2015, January 2016, the market in the second half of 2015, it was correcting in time and price. So we can see those corrections, 15%, 20%, and then you can't really call COVID a correction. That was a crash, 35%. Now, interestingly, if you go back and you look at late 2012 to late 2014, at the most, there was a 9% correction during that period. If you go from late 2012 through most of 2015, that's roughly 3 years. There was one 20% correction in late 2014. So late 2012 to late 2015, that was a very, very smooth time for the stock market. Only one 10% correction. I mean, it was very short. And what happened with precious metals? We know that that period was a disaster. Late 2012, gold rallied up to 1,800. And, by the summer of 2015, it was trading below 1,100. So there's a lot of nuance to the relationship between precious metals and the stock market, gold in the stock market, gold stocks in the stock market. But given the recent history, and look, you have to evaluate many things. There's the dollar. There's real interest rates, how things are performing in real terms. What's the primary trend? There's all those factors that we have to evaluate. Along with various indicators. And for the purpose of this analysis, the stock market has been performing really, really well since gold and gold stocks have corrected. And so if we are to see a significant 15% correction in the stock market over several months, that to me is going to coincide with, I don't know if it's going to be a temporary low in precious metals or more significant, time will tell. But the way I'm looking at it, potentially we could see a low in precious metals at some point in the second half of this year. We're in a short-term rally, but I don't think it's going to have legs. But it's important to keep in mind, the stock market can correct, and then when the stock market bottoms, precious metals can rally and outperform. That's one scenario. Another scenario is the correction gets going in the stock market, and in the middle of it, precious metals can start outperforming. So you have to take a bird's eye view and a big picture view. But I feel pretty strongly about this. I think there's a good chance in the next 3, 4, 6 months we get a stock market correction, and who knows, that could turn out to be the next significant low in precious metals. And the fundamental reason for that is because when you get a significant correction in the stock market, unless it's a crash, when you get that correction, real interest rates typically decline during the correction. So that's the fundamental reason why you see precious metals outperform. And then you also have capital flows. Look, over the last year, all the money has been rotating out of precious metals into other areas like the stock market. So you get a sustained correction in the stock market, naturally based on capital flows, that's going to benefit precious metals. So this video is a little bit longer than I wanted. I hope the volume was high enough. Hope you enjoyed it. Follow all my work at TheDailyGold.com. Leave me a comment. Let me know what you think. And I look forward to doing another video for you guys in the days and weeks ahead.